Hello. In this video, I'm going to talk about one of my basic starting points. This is something I always start with when I build my recipes. It's a very simple process, but it always puts me in the right direction. Here I just have a chart up using Ada, and I'll change it in a few minutes from now. But I have it set up the way I would normally start any process I work with. This is just your standard dollar cost averaging, set up and tuned appropriate to my basic settings. I personally prefer a $600 budget per coin, so I prefer a 2% deviation using the step method. Now, if you want to limit this to a $300 budget, you can use a 4% deviation, and it works very well. For example, at 4%, using a $300 budget, you notice it didn't change very much. 4% is 25 positions, it's only using 4 positions. Nice and simple. So for a $1,200 budget, this would allow you 4 different coins. But I want something a little more aggressive, so I'm going to use a 2%, which gives me 2 coins for a $1,200 budget. But this is just what I call cookie cutter layout. Nothing special about the DCA, and of course the analyzer set up in proper mode. Nothing special, shorting turned off, all of the properties set up the way they should be, so forth. Now we get to the part that matters. The momentum. I always start with a momentum. The trend is your friend. Always follow the trend. Anytime the price action is above the momentum, that's a buy signal. Anytime the price action is below the momentum, that's a sell signal. This kind of stuff is whipsaw or sideways market, or flat. There are a lot of different terms that govern this. But this is when you want to buy, this is when you want to sell. Now what makes this stand out is I am using inverted signals. Normally the buys take place down here, but because I want to filter out weak signals, I want the buys to take place up here as the momentum grows. Now, as I said, this is a very simple and easy process. I use a 2-channel momentum. I prefer using 2 channels over 1 channel because it helps avoid a dead zone of less profitability. By using the 2 channels, the part that's in between the 2 channels is automatically ignored. So high and low for my sources, and I'm using in this case a smooth, simple moving average. This takes extra flux out of the market and really smooths it out gradually. And of course, momentum. Now I'm using a very unusual length. For the 1-minute candlestick, I'm using 1,440 candles. This basically means I want my momentum calculated on the last 24 hours. No signal deviation and none of the extras, and no confirmation. So, this momentum is based upon the last 24 hours of this coin. Now, normally I would use a 200 length, but for the purposes of starting, I always want to look at a full 24-hour period. That way, when I go up through the charts, it will change, as here a 24-hour period will be 288. You can adjust it to see, but it still gives you a good broad basis. Having such an unusual length to your momentum really helps you see much broader angles. It also gives you a very good trading process for just using momentum by itself with the dollar cost averaging module in strategy mode. And that can be really good. As you can see, a lot of interesting things here. Here is a nice trend, nice and easy. So if you purchased down here, you followed this trend all the way up to the top, and you sold right here, you made a reasonably good profit. That's what you want. That is why I use this method. By itself, it just works well. So let's go back to the 1 minute chart. And now let's look at the dollar cost averaging. I'm using step mode. I always start here because this is the most conservative. And this gives me an idea of exactly what I'm going to look at for a channeled asset. So as you can see, this is fairly channeled, not a good candidate. A lot of sideways action just within the coin itself. But that can be a good thing, because as you can see, I only picked up 4 positions. So this does very well with keeping your budget very tightly constrained, even though you're only using momentum. Now, this is a building block. You can take this as it is, completely as it is, inverted, and go to town. Or you can add one of my other favorite components to it, which we'll do soon enough. For now, let's just look at the chart. For 4 days, I'm rounding up. It makes it easy to find out what the monthly budget's going to be, or the monthly average for profit. So for 4 days, I'm making $1.24 here. Not bad. It's reasonable. So let's take a look at a few other coins, and you'll get the idea of just how conservative or controlled this approach really is. Okay, this one says it made 7 purchases. Not enough information for the analyzer to actually work. And that is often very true. So that's where you can go to a higher time frame and extrapolate data. But even in a higher time frame, you don't make many purchases. That's important. And it made $12 for 17 days. It did 11 trades roughly, and it has a 90% accuracy. That's reasonable. Why is that reasonable? Because I'm not looking for one coin to sustain my whole budget. Given what I see right here, I can run a $200 budget or 20 positions. With a $1,200 budget, I can run 6 different coins, where I'm not going to make my ends meet off of one coin. I will be able to aggregate all of the coins together. So I will get a combined budget, break even through multiple coins. Also, doing it this way, I can actually look at coins I would normally never trade. This coin, only 4 positions, as a maximum for the last 17 days. Round up to the nearest 10, again a $200 budget, $11. So as you can see, through going through this process, you can really pick and choose some very good coins. Now, not every coin is going to be good, and not every coin is going to provide a good outcome. But this process isn't necessarily about profit alone. This process is also about weathering the market and always trading within the trend. So let's get rid of this, because really this is worthless. All that matters is right here, the trend. This is going down or a bearish cycle. This is going up or a bullish cycle. Buy here, sell here, walk away with a very nice little profit. And this is one of the nicer coins to trade on, even in smaller intervals like 1 minute. And because you are limiting the amount of exposure to this coin, even with it not being a high market cap, for the last 3.5 to 4 days, you've only risked $40. Go up here to the 5 minute, only $30. Go up here to the 15 minute, only $50. The 30 minute, $80. The 1 hour, $50. Now we can keep going and seeing, but this tells me by looking at all of these, I should be fairly comfortable with a $200 budget, just trading momentum. Now you could always go to a more aggressive situation with the price method, and I encourage you to look at those charts. But for the purpose of what I am seeking, I am going to stay with the step method, and I am going to look at making this the perfect recipe where I can actually put it in place, set up my alerts, and check it once a week. That's right, you heard me. Only once a week. That's all I want to check this. Maybe longer depending upon what life is going to have. For a lot of people, winter means a lot of things. Family, school, university, shoveling snow, whatever. Higher workload. So it requires different thinking. You can't constantly needle nook or helicopter pilot your investments. You need your money to work for you even when you're not watching it. This is my starting point. Always. Now you can drop this to a 200 period and get it slightly more aggressive. And I've done that quite often in my recipes. But for the purpose of this one, I like it where it's at. It does well. Now we're going to add to it. What are my other favorite indicators? MACD. Now, this works with just about anything. Crossovers, MACD, parabolic, stop and release, Bollingers, any number of different functionalities benefit with a trend hunting momentum. And it really is one of the best starting places you could ever get. So let's set this to the momentum signal line. We will turn on the chart, turn off the signal line, and now, something else that I always do. I don't necessarily mess with my moving averages, but for my lengths, I always prefer prime numbers. And I always prefer to move down for shorter time frames. When you go up in your length, you go for longer time frames. When you go down in your length, you go for shorter time frames. Remember, I have a 1 day or 24-hour momentum, so I'm not going to get a lot of swing here. This is a leading indicator, so I want the swing here to filter out all of this. So let's turn on confirmation. Okay, let's come back here. Now I want to move down, so let's set this. I like prime numbers. You can use Fibonacci's as you want. So for prime number 13, move down. 23, move down 7. A nice, simple little trick. And as you can see, it updates the chart. It doesn't do anything to your signals, but it does get rid of a lot of unwanted signals here. This may be good or bad depending upon your situation. I personally like this combination. But if you wanted to go Fibonacci, well, 13 is a Fibonacci, 34 is a Fibonacci, and 8 is a Fibonacci. And as you can see, when it updates, you get slightly different. Not enough to make a big difference at this point, but it might be enough for what you're looking for. But I always prefer primes. But this actually looks pretty good as well, so I'll leave this. Here we go. And now we will adjust our dollar cost averaging to the MACD module. And I would feel comfortable setting this up and walking away for a week. Coming back a week, coming back 2 weeks later, even coming back a month later. This would work perfect. Of course, you would have to constantly watch TradingView and your trading platform, making sure TradingView delivers your signals. But this algorithm is perfect. Nice, long-term, really simple approach. And it's rock solid. The dollar cost averaging module is going to give you some very nice points. And even if you do go a little more aggressive with a defensive price method, you'll find that this system still does extremely well. Even with all that traffic, only 11 positions. So let's see how it looks. $21 on the 1 minute for 11 positions. That's not bad, and it's not out of control. Something that really is a very good sign. Okay, here we go with BTC. Again, slightly more aggressive, $170. It only makes $5, but that's the nature of BTC. Now in this case, 17, round up and double, 40 positions. So this would be roughly a $500 budget. That's not bad for this kind of a quality trading system. It's not as resilient as the step method. For example, the step method, giving that a $600 budget, you cover the entire volume of the coin and you never have to worry about it. So that gives it not only long-term resiliency, but that gives it the closest thing you're going to get to set it and forget it. This one needs a little more maintenance, and not something I personally would pick given what I am seeking, but it's still a very good combination. But let's go back to what I am intending on. Being able to let this trade and not worry about it. So, there we go. Set it and forget it. Or as close to it as reasonably you can get. Even with some of the lesser quality coins that have a known history of horrible behavior. Let's take a coin that can be a real nightmare. Let's face it, if you've ever worked with this coin, you know just how bad this coin can drop. It doesn't do well in a lot of markets. So let's actually see this market. This coin took a beating with Black Thursday. It's just not a good coin. But as you can see, it does well. It does reasonable. Now, let's take this, put it back to momentum, and let's get rid of the MACD. Why? Because, well, we want to see something else. MACD is my favorite, but it's not the only option. Momentum plays so nicely with so many different functionalities. For example, another one of my favorites, and this is a constant classic. I've mentioned this before time and time again. Momentum with Bollinger Rsi. Beautiful, simple, eloquent. So let's just set this up. So here we are. I'm not even going to change this. Simple Bollinger. Now we're going to go couple it to a very simple, nice RSI. And you'll see just how well this works with momentum. Again, momentum always being the starting point. So we put this on, go to Bollinger, and now from Bollinger, we'll go to moving averages. We'll have the Bollinger Band pull in the momentum. And now we'll couple the DCA to the final chain, which is the RSI. And here you go. Classic, simple, eloquent, beautiful. Some of the best trading is done with the trend. Again, something else, I would not have a problem letting it run a week to 2 weeks on this coin and not even looking at it. Let's find an even more hideous coin to work on. Something that is just unholy. No, Raven. This coin can be a nightmare. This coin can be unpredictable. It can be unforgiving. And yet, only $50 at risk. And it can do very generous as well. So you pick a time frame where you have enough data and let it analyze. Now we'll get 17 days worth of data. And it made $3. $3 profit off of Raven for a $50 investment is really very good. This is a walkaway system that just fits. So, here you have two classic approaches that use the starting point of momentum. Both of them work exceptionally well. Even on coins you wouldn't normally expect to have such simple constraints, and yet they do. $40. $13 payout. $13 for a $40 investment. That's 25% profit, or 25% of your total budget that you've made in profit. That's pretty good. Even at a much more aggressive time frame, you're still not doing bad. And it's still something worth looking at. So, when you're starting, if you don't know the direction you want to go in, no matter what system you use, always start with the one thing that always gives you the good basis. Always start with momentum. Momentum will always give you your best information. The trend really is your friend. No matter what time frame you work in, no matter how often you trade, trading with the trend as a basis of your trading will always put you in the right direction to get the best profits possible. This is where you start, always. Trade with the trend. Even with seeing this right here. Nice easy area, downturn, you begin to see exactly how to fine-tune your strategy to get the best. Get in, get out. Some really nice profits, just with very simple, eloquent tools. One of the biggest mistakes traders make is they don't follow the trend. They don't look for the trend. They don't stay on top of the trend. They don't prepare for the trend changing directions. So right here, this is a good indication. And by using MACD, Bollinger's Rsi, stochastic, Williams, Arun, any number of hundreds of possibilities, this will always give you a wonderful profit. And one of the best tools, besides MACD, is really the Ichimoku cloud. That too can be a brilliant trading system. Simple, eloquent, and very resilient. But it all starts with understanding the direction and trend of the market. Until next time.